Hello everyone, in this video we are going to solve problem on profit prior to incorporation. This is also a very simple concept where we are going to solve the income statement and we are going to identify the profit or loss relating to pre and post incorporation period values. Okay, so the question is here. A company incorporated on May 1st, 2021 acquired a business with effect from Jan 1, 2021. The first accounts were prepared on December 31st, 21. In this question, the financial year starts from Jan and ends at December. So Jan to December we are calculating, and the company is incorporated on 1st May, which means here we are going these two statement or two lines is particularly related to time ratio. Next, gross profit directly they have given as 56,000. General expenses are 14,200. General expenses are related to time ratio. Okay. Next, director's remuneration is 1,000 per month. So here they have given director's fees 1,000 per month as a value. So we are going to identify the time ratio, and we are going to pay only after incorporation only we are going to give, because before registration we are not going to appoint directors. We are not going to pay them the remuneration. So after incorporation only, which means post incorporation period, we are going to pay them the salary. Next, formation expenses amounted to rupees 1,500. This is also full and full related to post incorporation. Next, rent, which was 100 per month till June 30, was increased to 3,000 per annum from July 21. Okay, here there is a little adjustment in the calculation of rent. While solving this, we will while calculating the working note and while calculating the ratios, we will identify the amount of rent there itself. Okay. Next, the manager of the earlier firm whose salary was 500 per month was made the director upon the incorporation, and then his remuneration thereafter is included in the figure of director remuneration. So above statement only the remuneration is been included, so no further adding the remuneration at all, because already it is been included in the director's remuneration itself. Next line, prepare P&L account for the period assuming that net sales were 8,40,000. This is particularly related to sales ratio. Sales ratio. The monthly average sales for first 4 months 2021 being one half of the average sales of the remaining period. Also state how the pre and post incorporation profits are treated, which means where we are going to transfer the profit that we have to calculate. So this is the question. It might be looking like a bit difficult, but such a simple question, don't need to get any confusions. One by one we will start from first step, that is calculation of working notes. Under working notes we will be calculating first one, calculation of time ratio. First we'll start from easier things, guys, don't need to get any confusions. So how we will calculate time ratio? Pre-incorporation period is to post-incorporation period. This is how we will solve, isn't it? So my books of account start from 1st Jan 21 and ends at 30th December 21, isn't it? This is what they have given in the question. So the company was incorporated on 1st May, which means 1st May the company got registered. May 21, isn't it? So which means 30th April 21 is my last date of pre-incorporation. If you calculate means Jan to April, we are having 4 months, isn't it? And remaining is 8 months in the post incorporation. If you reduce it, 1:2. So my time ratio is 1:2. Got it? Easy thing, isn't it? So very simple calculation. Time ratio we have calculated. Sorry, just slide it up. Yeah. Next, we are going to calculate sales ratio. What they have given in the question, we'll read out slowly and we'll solve it. Okay. Calculation of sales ratio. So as usual, pre-incorporation is to post-incorporation. Monthly average sales for first 4 months. Monthly average sales for the first 4 months of 2021 being one half of the average sales of the remaining period. So here what they are saying means, here they have not exactly given the particular information, isn't it? So how we will be calculating means, wait. So pre-incorporation sales, what they have given, average, the monthly average sales for the first 4 months. So we are going to assume that monthly average sales as 1. So for first 4 months the average sales were 1. So 1 into 4 months we are going to calculate, which is 4. Got it? Here there is no exact, they have not given the total sales, they have given the net sales. So in which particular month what we have incurred, we are not having those particular information. So what they have given numerically, I am taking that only. So in this question I have assumed my average monthly sales as 1, and that average monthly sales for 4 months, 1 into 4 months, I got 4. Next, for post incorporation, what they have given, and being one half of the average sales for remaining period, which means 1.5 into remaining period means 8, isn't it? So this is what they have given in the question, or we can write it as 1.5 into 8 also we can write. If you calculate it, how much we will be getting? Use the calculator, or it is very simple. 1.5 into 8 will be getting 12. So 4 ones are 4 threes are. So sales ratio is 1:3. Got it? This is the ratio. Got it? So very simple. What they have given in the question, directly we have taken that. They have given 1/2. If they have given doubles means we can take it as doubles. So this is how we can take, or else if you want to calculate how we have calculated in the previous sum, we have to write Jan to December. We have to write. Before that we have to identify average monthly sales, which is around 70,000 per month. So we have to calculate like Jan 70,000, Feb, March and April 70,000, and 1.5 means 70,000 into 1.5. Such a long procedure. Even if you do the same thing also means in numbers reduced value will be 1:3 itself. Okay, so here I have taken directly what they have given in the question in simplified manner into, I have assumed my average sales as 1 into 4 months and 1.5 into 8. This is how I calculated. Don't need to do long procedures. Simple calculation will be easier in the examinations. Got it? So this is related to sales. Next, very much important, we are having a new concept where rent we are going to calculate it. Rent, calculation of rent. So what they have given in the question, they have mentioned as rent which was 100 per month till June 30th 21. Yes, so rent till June was 100 rupees, 100 per month. Got it? Next, what they have given means and was increased to 3,000 per annum from 1st July. So which is from 1st July amount was increased to 3,000 per annum. Got it? This is the information. So one value is in per month, another one is in per annum. We have to convert it into per month. So how we are going to convert it? 3,000 divided by 12. They have given per month value, isn't it? So 3,000 divided by 12, it is 250 rupees, 250 per month. Per month value. This is the per month value. So again, what we have to do now? Use different colors. Yeah. So pre-incorporation will be incorporation period rent value. So Jan to April, which is till June I have paid 100, isn't it? So 4 months into 100, which is 400. Got it? Next, from May and June, because till June I have paid, one second, I'll clearly write it here. This is pre-incorporation, isn't it? Now I'm calculating post-incorporation rent value. Got it? For May and June it is valued at 100 only. So 2 months into 100, which is 200. Then July to December, that is for 6 months, the rent was increased, isn't it? How much we got? 250 as the value, 250 per month. So 600 into 6 into 250, that is around 1250. I'll verify it once. Okay, into 6. Yes, yeah, it's 1500. So now clearly I write it here. Yeah, I'll use it. Pre-incorporation rent is rupees 400 and post incorporation rent is 200 plus 1500. We have to add both the values, rupees 1700. This is the total value. This is how we have to calculate it. Got it? So very simple. Clearly understand the question. First write the given data, whatever they have given, read it once or twice, then bifurcate it into pre and post incorporation and clearly calculate it or multiply it. You will be getting the exact answers. Hope you understood this concept of calculation of rent. Very easy, no need to get confusions. So we got time ratio 1:2, sales ratio 1:3, and rent we only calculated 400 and 1700 as the values. Got it? So I'll move on to the solution. So you all should have that format where we used to write. Same, yes, as usual we are going to start with gross profit. Gross profit in question they have clearly mentioned 56,000 into how much sales ratio we got 1:3, that is 1/4 we have to calculate. Will be sales ratio 1:3, 56,000 into 1/4, that is 14,000, and for post incorporation 42,000. So I'll write the total. $14,000 and 42,000 as the above total. Next we are going to write one by one all the expenses. First one we are having general expenses. So general expenses will be calculated in the time ratio, so 1:2. So total general expenses was 14,200 into 1/3, around will be getting 4,733 and 9,467 for the post incorporation. Next we are having directors remuneration. Directors remuneration full and full related to post. Per month 1000 means for 8 months 8,000 rupees. Got it? Next, formation expenses. So formation expenses is also full and full related to post incorporation. So 1500 directly to post incorporation column. Next we are having rent, where already we have calculated. I'll just write it as working note. So this is based on time ratio, but since we have calculated, we don't need to write this time ratio over here. 400 and 1700. Next we are having manager of the earlier firm whose salary was rupees 500 per month, where see the statement is manager of the earlier firm, which means pre-incorporation. For example, some manager is been working in the old company for whom they are going to pay the remuneration now. So this expenses full and full is related to pre-incorporation. So they have clearly given in the question as earlier firm. So manager remuneration full and full related to pre-incorporation. So 500 per month. For pre-incorporation we are having 4 months, so 500 into 4, 2000 is the value. Got it? Next, so directors, yes, all the adjustment have been calculated. There is no any other informations given in the question. So now we are going to transfer the net profit if we have. So net profit transferred to. So one by one, let's see how much total we are going to get. So same total as above, we are going to write it here, 14,000 and 42,000 as the total. I'll use different colors now. Yes. So first pre-incorporation profit will be transferred to capital reserve. So 14,000 minus 4,733 minus 2,400, we'll be getting 6,867 as the profit value. Okay, so let's see. Next, 42,000 minus 9,467, again minus 8,000 minus 1,500, again minus 1,700. So 21,333. This will be transferred to P&L appropriation account. Got it? Very simple and easy concept. So here an extra addition or extra adjustment was there, which is totally related to rent. That is also very clearly mentioned. So I think no confusions right now. So if you have any doubts, means kindly comment in the comment section. So I'll try to solve it. Don't get confusions. Read the questions, understand and analyze it. Then go for solutions. Use the simple method. Use the short method. Then only you'll consuming less time, or else you'll be stuck in the working note itself for half an hour. So that won't be work out in the exam hall, isn't it? So try to write the exams very calmly. Got it? So hope you all understood. Like my channel, subscribe to my channel. Thank you for watching.